Well, hello everybody, welcome to the Forex market analysis session. If you guys are new, my name is Alexander Nikitin. I am a professional pattern trader and a developer of MPS software. In today's video, I want to do the analysis of my whole portfolio of 19 pairs, and I'm going to analyze 1 hour and 4 hour. So it can take me for a while to explain you the identification step, the trade execution step, and the trade management step. So sit back, relax, maybe take your notebook and a pencil, grab your coffee and enjoy the show. Okay, first of all, I will explain how I do the identification step. The identification step is done very simple. I simply run my newest MPS software. You can find more about the MPS software on my website, www.ps-software.net. On the front page, you have the 2 videos there, 1 hour long each. So take your time to watch it and uncover the full potential of this software. In few words, it is a professional software that scans for pattern both on history and for real-time trading. So not only you can use it for trading, but you can also do the back testing to calculate the performance of the patterns and to develop your own approach based on this pattern, to develop your own trade plan, to have maximum profits with minimum risk. I have several reasons for automatic scanning of the pattern. Reason number 1 is that pattern identification is always subjective, so it depends on your emotional state, it depends on your mindset. Sometimes you look for larger patterns, sometimes you look for smaller patterns, sometimes you pay attention to minor swings, sometimes you don't pay attention to minor swings, and it is very subjective. Although you may use the same set of rules in this section of measuring the swings, how they related to one each other, and although there is ratio may stay the same, but the swings themselves actually identified very subjectively. Okay, that's why I decided to create an algorithm that will draw the swings, and based on these swings it will compare one to each other to say if there is a pattern or there are no pattern at all. This was my reason number 1. And my second reason was to perform the back testing. It is closely connected to the first reason, to have objective setups each and every day. And the second reason is to perform back testing. I need to do the market research to calculate how often the pattern wins, under which condition it wins, and what is the best way to execute and manage the trade for this specific pattern, and what should be the pattern size or some other details for each and every pair. Well, know that every pair has its own personality. That's why the patterns should suit that movements. They should suit those ups and turns, the swings of the markets. So to perform back testing, and at the same time I want to be sure that my patterns for real-time trading identified exactly the same way they were identified on history. That's why I came up to creating this software. And another reason for that, the reason number 3, is that the majority of patterns were discovered using the algorithm. So if you take the butterfly pattern, it was created by Bryce Gilmer, discovered by Bryce Gilmer. I mean, not the exact ratios of 786 and 127 reversal points that you can find in Scott Carney's books, AB equals CD, also pattern complementing this completion point. I mean that the general structure of a pattern, that it is a kind of exhaustion pattern that is typically found in the end of a trend. This pattern was discovered by Bryce Gilmer using this software that was called Wave Trader. Wave Trader or Wave Analyzer. I think Wave Trader. Okay, some patterns also, the bat pattern, crab pattern, and others were found by Scott Carney himself using the software as well. He had a friend, not remember his name, who coded his ideas, who coded some of his ideas, and he simply checked if his ideas work or not using this software. And it was the whole story about how this bat pattern appeared. It is described in his book Harmonic Trader Volume 2 or Harmonic Trader Volume 1. Search for these books. They are available on Amazon, and they are not very expensive. Read this story, and it is said there he asked his friend to code his ideas, to code his patterns, and then he checked how often they work, how often they don't work, and that was the way the level of 886 was discovered. Do you see that? It was all algorithmic. It was all found automatically. And of course, doing any market research, you should stay objective. Something that you discover, something that you see, should be objective, and it should be verifiable, repeatable, and of course, it should be tradable. Otherwise, it is useless. If you can't repeat the results, if you only have can identify the pattern after it completed and hit the targets, it is useless. So the pattern, there should be the way that the pattern is drawn in advance, and there should be some rules that will invalidate the pattern in this case or confirm the pattern in the second case, and to tell you the objective information. So NPS Pro suits all these rules. It is a powerful software that draw patterns for historical performance, for real-time trading. It has a switch for type of patterns. You can switch between harmonic and advanced. Here harmonic, here advanced. You see that? You can switch on and off some patterns that are your favorite, and you can switch the swing identification algorithms. So you see that if you're only using the price extreme algorithm, you can always check if other algorithms confirm the patterns, and these oscillator-based algorithms are very popular within the circle of eliticians to confirm waves. So it is very useful to understand that you are not the only one who sees this pattern. Now let's continue. As for the backtesting, simply to perform the backtest, you simply scroll it back and see it. And look how patterns are found. Just look at this right part of the chart. The software thinks that after this bar, nothing exists. So exactly as we think in real-time trading, we don't have new bars yet until they form. And if I press F12, the bar appears by bar, and you see the software recalculates every bar. You see the line is changing according to new bar, and the information is recalculated, this zigzag line that is drawn. It is very useful, by the way, to have the zigzag line plotted on the chart, because you can see if the swing you are looking at considered straight by the algorithm or it is a choppy movement. So you see, now it shows a potential pattern, and as it fits the frame of a cipher pattern, it is drawn, but then it may disappear if it is invalidated. Exactly this way the unified Gartley disappeared. Now the potential unified Gartley is drawn, but if it is invalidated, it will disappear. So you can see right now it is valid. All the patterns disappear because they are not needed, of course, so not to draw them constantly on your chart. So you can see that it is not something that is fitting the history, simply watching here. Okay, you see this pattern here, it must be a winner, so let me draw a pattern here. Of course, it is very easy to identify the pattern after it already complete and after it hits the target. By the way, let me see if we can identify this pattern programmatically. To do that, you need to go to settings, simply make the period slightly slower to find the pattern because it is smaller. Let me type a period of 5, maybe something of this kind, and you see the pattern was identified here. Let me use my favorite custom Gartley, and it was not a custom Gartley. Yes, the only one that fits the scheme is this Gartley advanced formation. It is the only one that fits. You can see it. Well, simply switch to a lower period to find smaller patterns. Okay, I prefer something in the middle. 10 period is enough. And here are the patterns that I like most. They are ciphers and custom. So it looks this way. Okay, after this large intro, after that explanation why those automatic algorithms are very important. By the way, the Scott Carney was a former hedge fund manager. Larry Pesavento, same stuff. He was managing fund. Bryce Gilmer, he's an independent trader. I don't have any information if he was managing the funds. Also, Ross Beck is another godly trader. Well, he is an independent trader. I don't know if he was a hedge fund manager. Okay, so these big guys, these big players, some of them are hedge fund managers, some of them not. They all use those algorithmic programs. They use automatic identification of those levels to take some actions. So it is simply a matter of common sense to use the same. It is simply a matter of logic to try to use the same algorithms, try to identify the same levels the hedge fund managers do to trade with the overall direction, to trade with the overall flow, with the overall money flow. Okay, let us start. 1 hour euro dollar. We have nothing for our. We have this unified Gartley, but for me, guys, this Gartley is invalid. Those of you who follow me for a while, they would say it is invalid because the CDD lag should be one movement. That's why it is handy to have this indicator plotted. It shows you that it's not one movement, it is 1, 2, 3 movement. It is 3 movement. It should be 1. Okay. Then let's go to this dollar yen. Dollar yen already hit targets. Okay, so not today, yesterday. If only you were watching my videos yesterday, if only I would record anything yesterday, you could have this pattern, but it was only for me. I was the only one who took that and that. Okay, let's go next. Pound dollar 1 hour and pound dollar 4 hour. The 4 hour pattern is still valid. It is still valid. You see that ideal straight movement, although we have some price action to the downside, but it is ignored by the indicators as a noise. That's why it is a straight movement to the upside. Let us see if it hit targets. If no, then you can go and get on board. Okay, guys, in this situation, simply close your position with it is close enough. Well, the targets, although those targets are the levels, price levels, they are 33.69.5. What separates professional traders from those newbies, that they are having that art of trading. They understand that the trading is, on one hand, it is pure science of mathematics and statistics, and on the other hand, it is an art, and they understand that this support resistance levels where the reaction might happen, they are not actually the precise price levels. They are some zones, and they watch it closely when price comes very close to this zone. What is the price action? So for example, here if I stop my monster pattern search MPS 5 prevent from recalculation, and if we go to appropriate time frame, for me the appropriate time frame is 86, okay, 1 hour, 86 and 1 hour. So this inside bar was the first sign that price is not going to go lower below this low. It was not going to go lower below that low. This inside bar is the first warning sign. So simply taking the action on the second bar, simply taking the low of this what was that bar, of that large bar, would be enough to close your trades. Anyway, you should have a predefined set of rules. You should understand what is the reversal, what is suspicious price action, what is the warning sign, and so on and so forth. So don't wait for your winner turn into a loser. You see that? It may easily go this way, hit your stop loss, and you have nothing. So professionals don't wait for that. They watch these levels carefully. Or maybe it should be analyzed on 30-minute time frame. And on 30-minute time frame, it is even more visible. First of all, we have these two bars moving towards our targets. Then we have that large wick to the downside. It means that buying pressure is intact. Then we have this trending bar to the upside. What I mean by trending bar, it means that we have a very good distance between open and close of the bar, and this bar is closing above the high of the previous bar. This is called the higher close situation. By itself, it is a reversal pattern. And then look what happens next. We have that indecision bar because it is actually in the range of the previous bar. Then the second bar is kind of indecision candle, and then the third bar is the bar that penetrates the low. It gives us hopes that price may go lower to the 382 action, price action. But look at this candle. It is called a key reversal bar. It is the bar that has a low lower than the previous bar and a close higher than the previous bar. So simply taking profits on this bar, will be very good decision, because after that price reverses. After those key reversals bar, price reverses as well. This one was a key reversal bar, also engulfing the previous bar. This one was a key reversal bar, the key reversal bar. It affects several bars, but sometimes it may be enough to come back to this entry level, or to come back to stop loss. So don't be that kind of stupid and stubborn trying to hit every pip. Okay, and of course you should have a confidence that this stuff works, and the only way to acquire that confidence is to do the backtest, to do your market research. Okay, let's go next. Euro yen 1 hour, 4 hour, nothing here. Aussie dollar 1 hour, 4 hour, nothing here. The identification part is very simple when the preparation is done, when you have this software, or when you backtested the patterns and you have trained your eyes to identify these patterns automatically with your eyes. Your eye is trained well, so you're acting like a robot. Another winner situation here is dollar Canadian cipher winner. I had yesterday, or the day before that. I think yesterday morning it was. No, it was the day before. Okay, and here this situation is wonderful. This is New Zealand dollar 1 hour unified godly. Now let's consider this example, how this will be traded, if it will be traded. Okay, first of all, we should decide if the size of the pattern is okay. I decide the size of the pattern both by price, you see this movement, and by time, you see this thing. Okay, by time the pattern is okay. It is 61 candles. My minimum it should be 50 and my maximum it should not be more than 100. And by price I should compare these two numbers. 18.6 says that it is too large for this time frame, sorry, too small for this time frame. That's why I am to stop that, prevent direct calculation, and I am to switch to 30 minutes to have a better understanding of what's going on. And here we have it this way, 18.6, we have these bars, and this one is 25.5. It says that we should go even lower to 15-minute time frame. Okay, now this is the pattern, the time frame to execute the pattern. But guys, my rules are very, very strict, and they say that time in this pattern identification, the number of bars is more important than the price. That's why I go back to this, and if it is more than 50, then I will use 1 hour time frame for that, for entry reasons. Okay, now what are those entry reasons? I have very, very simple rules for that entry reason. They are called powerful bullish close, powerful bearish close. Whenever we have a powerful bullish close here in this rectangle, simply enter after the candle close. Let me show you what it is. Powerful bullish candle. It is a candle that has this range. The range should be not very small. It should be 180 at least, average true range of the candle. Very small candle means nothing, because those candles are they're not trending. They don't show the fight between bears and bulls. They don't show. They mostly show indecision when the range is very small. Okay, what we have here, we have the range between the high and low, and if we suppose this as 0 and this is 100% of that, so the powerful bullish close is something that is above 80% to 100. So the top 20% of that will be the powerful bullish close, and it doesn't matter where the open is. If the open is here and the whole picture looks this way, it will be a key reversal bar. Yes, if the open is here and we have previously this picture, it will be a pin bar. Yes, and if for example the open is here and previously we had this price action, we will have an outside bar or engulfing bar or whatever, or maybe the previous price action was this way, so we could have a piercing line pattern, if you like the terminology of Japanese candlesticks. Well, it doesn't really matter. What matters here is the close. So you see that there are plenty of variation, but what matters is the close. The close stays the same, the high and open stays the same, and other variations, they simply are variations to create new and new names and names and names. They don't have any meaningful information. This is my new way at looking for candlestick patterns. But if we have it this way, powerful bearish close, it will tell us for continuation to the downside. And pay great attention to this level, guys. This level is very important. Although I have the buffer from here, yes, but if you have it this way, you have a powerful bearish close through this level, like this, then you should better ignore some signs of reversals below this level, because if it indicates that the support is broken, most likely it will continue to the downside. So in this bottom part of your reversal zone, pay attention to how it breaks this X point. But if it goes very, very slowly, like this, let me draw it this way. This is the X point. Yes, it is a potential support. If it goes this way, for example, candles large, smaller, maybe a large one and closing above, something like this. This would be a very nice situation showing you the rejection of that level and simply support resistance trading. So pay attention to this. Bodies become smaller and smaller. So this was this was this. Sorry, it doesn't look like good. So we have it this, we have it this, and then we have it this, and preferably we have it this way. It would be a very nice setup for buying here. Okay, until then, no buys. Try not to buy until that. Buying that with a limit order, sometimes it's a good idea, but you should have a very clear understanding what happens within this last movement, and if it this movement goes into exhaustion. For example, I'd like to see it this way. Let me have it this way. The X to A, B to C. So we have this AB equals CD movement back into this zone, and I'd like to have some structure support, and we have that structure support. Especially if you switch to line chart, it will be obvious for you that the support is level is basically here. At least it starts here, and we have the extreme of that level that is here. So you see that the support starts here, and the AB equals CD right in this potential support zone. So simply here looking for that, and you can use some extension tools to get more confidence for that. For example, this one, and enable that. Go to expansion properties. I think we should add 2, the level 2, twice larger, $. Oh, it is very far away. Then we should enable 161A. Okay, $, this and this. Right in the zone, right in that ABCD completion, right in the zone, right in that support. So most likely the action will happen here at 0.70 and 4 pips. 0.70 and even number is 0.70. 000 is that psychological number, somewhere between this. So 5 pip area for a potential reversal. So having it this way, let's continue. I'll do the analysis for over time frame. Okay, nothing is here. 1 hour time frame. Pay attention to 0.70. 70.05 level, 5 pip buffer here, and of course pay attention how it breaks this level. You see that? So we just bounced off this level of this minus support. Here we have the open of 2 day, not today but 2 days back, 1 day and 1 day. It was the low of that daily low. Look how it breaks that. If we have these candles that are larger than usual, and the close of that candle is looking this way, that is very powerful tail close, then it will be a sign of continuation rather than that. Okay, after this level is broken, if it is broken vigorously, you can also enter short. So the pattern, when it is failed and it didn't work, it didn't perform any reversal, it turns into a continuation pattern. You should also exploit that stuff. So if the pattern fails, it is a very good sign that price is going to head lower and lower and lower. You should use that, and you can profit from this information that is provided. Price is not respecting the pattern as a reversal, but it blew it away, and you can trade it as a continuation. Okay, another pattern here, pound Aussie. This movement, you can see that it was an interrupted movement, so for me the pattern is invalidated. I won't trade that. By the way, I need to update the idea that I posted on TradingView that the pattern is invalid, because some of my followers don't understand how I trade. They don't have my rules, and they only looking for me to give some updates and signals what to do, open trade, sell, buy, whatever. I always want that it is your own decision whether to buy or sell. You shouldn't look at somebody else to tell you what you need to do. Take the responsibility for your own actions, and that's it. Well, many of them argue that, you know what, we don't know what to do. So in order to know what to do the market research, look what history does, and then repeat. It is repeatable. Price patterns are repeatable. That's why they are called patterns. It is something that appears over and over again, and that works and shows some predictable situation. On the other hand, this Euro Aussie 1 hour is a very good situation for me. Okay, let us see from completion to this. We have 100 candles. Well, it is just on the edge of my maximum allowed number. If it were 101, I would switch it to 2 hour to have a confirmation, because the candles are kind of very small. They we have so many candles that the meaning of that candle, reversal of candle doing something is very, very small. Okay, I hope you understand this. Okay, and the price says that it's 76, 64. This is the exact time frame to execute the pattern. Okay, you see, as soon as I switched that, zoomed it in, it disappeared because some of the pattern just disappeared. And if I do it this way, nothing disappeared because nothing is recalculated. Okay, let's draw the potential reversal zone. Let me explain you the execution part here. Okay, so what is it, the execution part? Look at the price action. When we enter the zone, you see that although we have a trending bar, it has a pretty good distance between open and the close. We trended from open to close. We have that large wick. Then we have a smaller bar. Yes, this means that it is difficult for us to trend further, and we have large wick. Then we have a range bar that is an inside bar as well. For me, it is a kind of small triangle pattern, something like this, triangle pattern or pennant pattern or whatever. It is simply a range bar because price didn't trend very much in either direction, and after it's broken, it is a sign of continuation. Once we have a sign of continuation, this means that I am to skip next reversal. If it happens at a bad price, I am to skip that reversal, because previously I had a sign of continuation to the upside. That's why having this inside bar with a powerful bearish close, I am to wait for further price action. You see that? Okay, after that inside bar turned and broke into the downside, now this sign of continuation was officially neglected. It was officially cancelled, because we have an opposite signal in opposite direction. It is an inside bar, powerful bearish close, broken to the downside. By the way, the inside bar is something very similar to that triangle trading. So if you go to very, very low time frame, maybe 5 minutes, you'll see what I'm talking about. It simply requires some practice to watch these candles again and again to understand what happens. And look what happened. We came back to our broken, it was kind of, what was it? Resistance. And now it looks like the resistance turned into support, because after that powerful trending bar, we have that indecision candles here and here, and after that we broke to the upside. It is a sign of continuation to the upside. So pay attention to this. A sign of continuation to the upside, it was cancelled by the sign of reversal. Yes, so they simply plus minus give you 0. Wait for another, nothing here, a sign of continuation to the upside. Now it was neglected by the sign of reversal, but this, look at this key reversal bar. It is very, very small. I'd like to say that it's not a key reversal bar, but it is a range bar. It is something that we know as a wedge pattern on lower time frames. And it was broken to the upside. The high of this candle is higher than the high of that candle, and this means that the wedge pattern is a sign of continuation to the upside. So we have 2 to the upside, showing you that we are going to the upside. Same stuff here, another key reversal bar, but don't be that trapped. It is not a key reversal bar, because for a key reversal bar you need at least 1 ATR range. It should be pretty good for that. And well, aside of this, so I'd consider all these candles, this 1, 2, and 3, being range trading, because they all have a very small body, and this range was broken to the upside. So what happens when it breaks to the upside is actually some kind of continuation. And now pay attention at this resistance level that was formed by this peak. This upside shadow, upside wick, shows a kind of respect. If we have this indecision candle broken to the downside, then we would have a valid double top. Also, you can watch for a confirmation on RSI. If the RSI will confirm that, simply let's go to enable some RSI oscillators, I suppose. Relative strength index. It is one of the most, let me time the period of 7, one of the most popular indicators to confirm that. Most likely we will have that divergence here. On the first top we have a higher overbought condition, and on the second top we have a smaller overbought condition, so it is called a divergence. So if you use that RSI to confirm your setups consistently, I mean that you backtested that method of divergence and you found that profitable for your backtesting, for your market research, you should apply that, of course, as an entry reason. I would look for price action here. What will be good for me is the key reversal bar, or some kind of inside bar, outside bar, whatever bar that is showing me a powerful bearish close here, something like this, but with confirmation, because we have pretty many signs of continuation. And I will also watch this closely. If we break to the upside, if we have that something of this candle, you can see it should be very big to understand that we have some momentum for a break. So this is the level that I'm looking at, and look at this candle, it breaks. There are also some tips for you to understand. For example, if we have a level here, and you see where this candle opened, it opened pretty far away from this level, and when the candle breaks this level, yes, the level is somewhere in the middle of this candle. It is a very good sign of breaking that. But sometimes it happens this way. Sometimes it happens this way. We have previous candle here, and it is closing very high at this level. And then next candle opens here, and it travels to the upside like this. Basically, what it says that we didn't have enough space to give you a powerful break. We should it is like jumping in athletics. You should have some space before you jump. when you run to have good speed for jumping, and that's why it typically happens this way after that. So watch for confirmation after this happens, so don't trade a breakout. Watch for a confirmation, maybe a retest or some wick respecting that level, something like that. Okay, we need space. You see, we had some space towards the level and we have some space after the level, so it is a true breakout. The same stuff here, we had in the middle of the body. Okay, and this is what I was talking about. We closed just at the high of the previous candle. We closed very close to that. Initially we tried to follow, yes, and then we fell back. So on 5 minute time frame or whatever, it will be something of this situation. Okay, watch closer the price action here to execute. Okay, 1 hour execution, yes, pretty good. Wonderful pattern, Euro Aussie, waiting for it to be executed. Now 4 hour and 1 hour on Aussie yen, nothing here. Euro Canadian, 1 hour and 4 hour, nothing is here. Pound Canadian, GBP CAD already hit some targets, and let's go to 4 hour. Potential cipher pattern at 71.41, pretty far away from completion, and you should monitor this movement to the downside if it happens. Of course, it is not a signal to sell that it will complete. I don't know if it ever will complete. If it completes, we will have some probabilities to move higher, but I don't know if it will go lower at all. I don't have a clue. I don't have a slightest idea if it will complete or not. Okay, wonderful setup here. It is New Zealand yen, and I explained that in my previous videos. But the same situation here. Watch the price action, and it is 88 versus 85, and the number of candles is 54. So this 4 hour is exactly the time frame to execute this pattern. And look how the level of 786 was broken here by this candle. Then we traveled higher almost to X point, and we respected that X point, so I entered at this key reversal bar. Then we came lower and retested that 786. We respected that 786 and now broken what was that, resistance. After that becomes support. Price travels back and breaks the level of resistance here, but look at how it breaks that. You see these wicks showing the power of that level, and after that we break it back. So this candle, large candle to the downside, is a good sign of continuation. We'll break it back. Then we came back to this 786 support level. You see that it was previously a resistance, then it turned into support. This would be a very good sign of continuation lower if we continue consolidate here. Let me draw a potential scenario here. If we continue consolidation, this is called accumulation pattern. So we accumulate some power and then we break it. Similar to this candle will be a very good sign of that. If we have a break higher, something like this with this candle, just exit with whatever loss or profit you have, because there is no way for price to reverse after that. In majority of cases it will travel. It is a very good sign of showing you a continuation. Okay, I think the majority of traders, especially the intraday traders, are looking at this head and shoulders pattern. So you can see it here. I think of that, but to have a valid head and shoulders, you should watch this right shoulder, how it performs. So if it's not giving you signs of forming a right shoulder but it moves this way, just exit with whatever whatever you have, don't allow your loss become even more loss. Okay, but right now the odds are in the favor of the downside, and the pattern stays valid. Now let's go Euro New Zealand 1 hour and 4 hour, nothing and nothing here. Canada Yen invalidated, so no pattern here because we already have two swings, already have two waves in this movement. 1 hour is nothing. Aussie Canadian 1 hour, a valid pattern. Also pay attention to this. Aussie Canadian, very good, valid level at 98.69.8 to be precise. 98.69, 98.70 is the level to pay attention to. And also let us see the support resistance that is nearby. So somewhere here we can have that very good situation. I like the line chart. It makes things very clear. So what happens here, we just bounce back, then we break that, then we bounce back, bounce once again, bounce once again. If we don't break this support, watch the price action. You don't need to wait until your stop loss is hit. For example, this is your reversal zone. It is simply a common sense, it is simply a matter of logic. For example, this way, simply look at this reversal zone, potential support zone, look at the price action. Yes, if you have this bar, it is a wonderful example of a key reversal bar along with the downside and closed higher than the previous close. But if you have it this way, breaking it this way, don't look at those reversals by here below this support, because most likely it would happen this way. Boom, boom, you will have a stop loss. Simply stay away. Or maybe it may happen this way, guys. So you have a kind of reversal by here showing you respect of this level, then it may move sideways and then it may break it below after that. So initially it bounces and then it breaks below. Guys, don't be stupid, simply close the position with this what was your range of what is your stop loss here? Very small, at least twice less than it turned further into a greater loss. So there are some tips on how you trade and manage your trades, and you should keep them all in mind, and you become more and more experienced in that stuff the more you trade, especially the more you trade using those simulators and historical trading. I like to use that MetaTrader inbuilt Forex strategy tester. So if I open that and run it somewhere here, simply price open bar period, let's say 1 hour time period, and something like this. So you see the bars are drawn automatically pretty fast, and let me do some templates here, delete these indicators, enable some patterns, cipher maybe, and the custom, and enable some price extreme algorithms. Okay, and simply pressing F12 you will see how it develops bar by bar. So practice it, practice and practice, hours and hours, tens of hours, how this level of support and resistance are broken, how they are respected, what is this penetration, what it means. Yes, will it move higher, will it move lower, and so on and so forth. And the algorithm will tell you what is that, if you have a pattern or not. Simply you can run the history this way using the strategy tester visual mode. It is a very good method of practicing when the history is printed bar by bar. You can also enable tick mode, and not only it will appear bar by bar, it will appear tick by tick. So, well, it will take for a while if you enable that mode, and each and every bar will be generated tick by tick, and you will see the price action within the bar while it is forming. And of course you can speed it up, and you can see it much faster than it is real time, but it will be time consuming, especially when you need to analyze thousands and thousands of bars, millions of bars. Okay, now let's continue. What we have was in New Zealand 4 hour. It is invalidated, not only because it broke the C point, but also because it is actually have several swings. For me, this setup right now is a very good sell situation. We broke this level, our ABCD correction, zigzag correction, confirmed the downside momentum, and this movement first will break to the downside, and then we have the first sign. The second sign of bearishness is breaking this low. It will be a confirmed downtrend, but from now we have a very good probability of price to move from here to here, is 66 points, and simply watch the 1 hour time frame for opportunities to get involved lower. Okay, Aussie New Zealand, it hit targets, and well, on the first trade it was a target. Okay, I hope you remembered all these patterns that I was showing to you. Just go back in this video, pause it in some timeline to take some notes, maybe to watch the price action on these trades. And guys, I repeat, to have a profitable trading, to have successful trading, you need to do the back test, you need to do the market research. There are pretty many names for that. It is called historical paper trading or whatever. You first trade it on history, you first develop the skills, and only after that, once you develop that, it's not about the knowledge, it's not about what I tell you today, that you feel empowered because you have some new knowledge that you previously didn't know, and you may have aha moment. Okay, this is the thing, why I was losing so many times. Alex just explained me what was the reason is break of that support and blah blah blah. Guys, it may work for a while for you. Trade number 1 is okay, trade number 2 is okay, and trade number 4 it won't work. So what you will do, you will start thinking, oh, maybe Alex was mistaken, or maybe Alex was lying to get more subscribers. He was talking some nonsense. You will never know if you are given the true gems of information, or you are simply misled to get more subscribers or to take your money away from you to sell you some products. Whatever is the reason to lie to other people. It sounds funny. Guys, what I urge you to do is to do the back test. Test this stuff again and again. Test this price action methods, test these patterns. Simply, of course, you need to know something, you need to know the basics. It is all about basics. It's not about all those sophisticated methods of extracting pips. If you don't know the basics, you will be unable to trade even with my software. The software draws the patterns for you. What you should do is to place the trade, but you will be unable to make it consistently. You will be unable to generate money in the long run, because you will simply quit the strategy. You will simply quit trading this method as soon as you hit, let's say, 5 losses in a row or something of that kind. and in order to stay underwater, in order to be a good swimmer, you need to practice your trading skills. You need to know how to limit your risk, how to cut your loss, how to let your profit run, and so on and so forth. So guys, hope this video was very useful for you. If this is the fact, please hit that like button, subscribe to my new episodes. I try to record them once in a while, maybe twice a week, maybe every day. It all depends on how much time I have. And comment below what is your opinion. Maybe you will give me a feedback or whatever. For other people who has no time to watch the full length of the video, maybe he will read the comments and say, oh, you know what, this video was worth watching. And if you don't mind, share this video on social media with your friends. Maybe you have some of your followers, subscribers, or whatever friends. There are different names for them in different social networks, and maybe they will see some posting this stuff that I just recorded, and they are struggling traders as well, looking for some way to make that thrust through. Different to say it, thrust through. Punch through, and to elevate the trading skills to the new level. Okay, until then, good luck, good trading, trade your plans, as Akil Stokes says, and I don't think you have any, but well, do the back test, create a trade plan, and after that trade this plan. As I told you, good luck already, and see you next time.